Let's talk about your money, something you work hard for, save, and depend on every single day. But have you ever wondered why it's not as safe as you might think, even if you do everything right? Most people trust the system, believing their dollars are secure in banks and protected by the government. But the truth is, the foundation of our financial world is shakier than ever before, and cracks are starting to show. Governments and central banks are printing money at record rates, quietly devaluing your savings with every new bill. Every dollar you earn represents your hard work, but its value is slipping away faster than you realize. This isn't a conspiracy, it's basic economics taught in every classroom and proven throughout history. The more money that's printed, the less each dollar is worth and the more your purchasing power shrinks. The dollar is just a promise, backed by trust alone, and promises, as history shows, can be broken. We're seeing confidence in paper money erode, and prices for everything from groceries to gas are rising fast. Your money is losing power every day, and most people don't even realize it's happening until it's too late. This isn't about fear. It's about being prepared and making smart choices for your future. In every crisis, there's opportunity for those who see the signs early and take action before the crowd. Real money, gold and silver, has held value for thousands of years, surviving every economic storm. They're the ultimate financial insurance, protecting your wealth when paper money fails. Ask yourself, is your wealth anchored to something real, or just paper promises that could vanish overnight? History is clear. Every fiat currency has failed, no matter how strong it once seemed. From ancient Rome to Weimar Germany, governments debased their money, and societies paid the price for that deception. The Roman denarius started as pure silver, but over time, it was diluted until it became almost worthless, just a shadow of its former value. People instinctively hoarded real silver, hiding it away as inflation destroyed the economy and trust in money evaporated. In Weimar Germany, hyperinflation wiped out savings overnight, leaving families destitute, yet those with gold or silver survived the storm. This isn't just ancient history, it's happened recently in Zimbabwe, Venezuela, and Argentina, where people watched their life savings vanish. Those who trusted paper money lost everything. Those who held gold and silver preserved their wealth and dignity. Gold and silver aren't about getting rich quick, they're about not getting poor, about protecting what you've worked for. They're the ultimate store of value when everything else fails, a foundation that endures through chaos. The lesson is simple. When money goes bad, society soon follows, and the consequences can be devastating. Gold and silver have always been the lifeboats, offering safety when the financial seas turn rough. They can't be printed or devalued by decree. They're not just investments, they're protection, a shield against uncertainty. Ignore this rule at your own risk, because history doesn't offer second chances. History rewards those who prepare, and punishes those who don't learn from the past. Inflation isn't just about rising prices, it's your money quietly losing value, day after day, even if you don't notice it at first. When central banks print more money, every dollar you own is worth less. The supply of money increases, but the value of each dollar shrinks. It's a hidden tax, quietly eroding your savings and purchasing power, making it harder to get ahead even if you're doing everything right. Imagine your money as orange juice. Add water, and it gets weaker. The more water you add, the less flavor and strength it has. That's what happens when more dollars are printed. The value of each one is diluted, just like watered-down juice. Prices rise not because things are more valuable, but because your money buys less. Everyday essentials become harder to afford. The middle class and savers suffer most, watching their hard-earned money lose value while costs keep climbing. If inflation is 8%, your $100,000 in savings is worth only $92,000 in a year, without you spending a dime. That's a real loss, not just numbers on a page. The government doesn't send a bill, they just take it, silently, through the reduced value of your money. Inflation punishes the responsible, and rewards debtors. If you save, you lose. If you owe, your debt gets easier to pay back. Why do they do it? Printing money is easier than raising taxes. It's a way to fund spending without direct backlash. But the cost is paid by everyone through lost purchasing power, making life more expensive for all. That's why smart money moves to gold and silver. These assets have stood the test of time as stores of value. They can't be printed or diluted, making them a safe haven when paper money loses strength. They're your defense against the hidden tax of inflation, helping you protect your wealth for the future. Want to know what's coming? Watch what the smartest players are doing. Central banks and billionaire investors are quietly buying gold at record levels. For years, gold was dismissed as outdated, but now, countries like China, Russia, and India are stockpiling it. They're moving away from the US dollar, building real asset reserves. Legendary investors are sounding the alarm, urging gold ownership as insurance. They see the risks, debt, money printing, and global instability. While the public chases stocks and crypto, the smart money is stacking gold. They're not after quick profits, they're preserving wealth. Why the disconnect? The crowd has sold paper assets while the elite buy gold. Don't be the last to figure out the game. Follow the money, not the headlines. Gold gets the spotlight, but silver is the secret weapon. Silver is both money and a critical industrial metal. It's essential for electronics, solar panels, and electric vehicles. The green energy revolution is driving silver demand to new heights. Yet, silver supply is limited. Most is mined as a byproduct, and stockpiles are shrinking. This creates a potential supply shock as demand explodes. When unstoppable industrial demand meets tight supply, prices can only go up. And that's before investment demand kicks in. When people seek a safe haven from inflation, they'll turn to silver. A surge in monetary demand could send prices soaring. Silver is leverage on both industrial growth and monetary chaos. It's a unique opportunity. Don't overlook it. Smart investors and the crowd think differently. The crowd buys at the top, driven by hype and fear of missing out. They sell in panic when markets fall, locking in losses. Smart investors do the opposite. They buy undervalued assets when no one else is interested. They're patient, disciplined, and look ahead, not behind. Right now, the crowd ignores gold and silver, chasing tech stocks and crypto. The smart money is quietly accumulating precious metals. They're not seeking excitement, they're seeking safety and value. In a world of debt and money printing, the real risk is not owning gold and silver. When the crowd finally panics, the rush into real assets will be massive. The transfer of wealth will be historic. Which side will you be on? Don't follow the crowd. Think like the smart money. Prepare before the stampede. We're at a turning point in financial history. The system built on debt and paper promises is cracking. Rising prices and global instability are symptoms of deeper problems. In uncertain times, ask, what is real? What endures? Gold and silver have preserved wealth for thousands of years. They're not promises, they're payment. They can't be printed, hacked, or erased. Gold is stability. Silver is explosive potential. Many investors own both for balance and protection. This isn't about pessimism. It's about realism and responsibility. Your financial future depends on where you store your wealth. The gold and silver shock is coming. Are you prepared?